Welcome back. I'm Charles Lewis, the Austin area realtor who brings you topics and discussions that will enable you to make better decisions when you buy, sell, or invest in real estate. Today, my friend Chad Christian from Security National Mortgage is back again. Chad, thanks for coming back again.
Oh, hey, thanks for having me back.
Today, we're going to talk about ways that you could increase your buying power, maybe some ways you hadn't even thought about. Have you ever thought about this, Chad? Back in like the 50s, the 60s, it was possible for a single income household to buy a house.
Well, you know, it was crazy. I was talking to my branch manager, and he was saying his parents have been living in the same house since the 70s out in Waco.
Right.
And they paid $30,000.
That seems cheap now, but in those days, you made $6,000 a year in your annual income.
Yeah.
After the 50s and 60s, when a single income household couldn't afford it, what happened in like the 80s and 90s where it almost took like dual incomes to be able to afford a house?
Oh,
you
yeah,
know,
that's where
prices
we're at
went
now.
up, but household income also increased, right?
Right.
Now we're in a period where values have increased, particularly here in the last couple of years, exponentially.
Oh, yeah.
What's the math? $400,000 house with current interest rates around 7%. You gotta have household income.
6 figures.
So you got to be over $100,000 in household income with minimal debts just to even have the conversation, right? But here's what I'm thinking: if one person made $100,000, they'd be able to talk to you, get approved, potentially buy a house, right?
Right.
If you had a family, a husband and wife both worked, they made $50,000 apiece. Together, they could go on the loan and buy a $400,000 house at today's rates, right?
Right.
If I'm single, do I really want to get married just so I can buy a house?
I wouldn't be the right.
No. I would never do it, and I wouldn't suggest someone does it. But how about this? What if I knew 2 or 3 other people that I liked enough to consider living together with, right? That we could go on the loan together, make a joint mortgage payment, and actually build some equity. So if I do get to a spot where I might want to get married, I'm not starting at ground zero.
And you can.
How does that happen, Chad? Tell us.
You can add up to 4 people.
4 people on the one. They don't have to be related?
No.
What about like credit?
Yeah, there's certain things. For that scenario, you have 4 people. They all plan to occupy the home. They don't have to be related. Let's say you're married. Okay. And husband and wife, let's say that they make $60,000 combined. They can add 2 other people if they would like to add for qualifying income and be able to afford a $400,000 house.
Or more.
Or more.
I mean, if that income's higher and all that. I mean, that's why I think this is a huge opportunity.
Yeah.
Now, here's a couple things that I'd suggest. Number 1, if you're married, built into that. I mean, there is a spiritual element to it, but there also is a legal element to it, right? If you get married and then things don't work out, there is a process called divorce where you can actually divide the assets. Any other type of relationship where you were to enter into a legal agreement to purchase a piece of real estate, it would be highly recommended that you get with an attorney and actually draw up a contract that specifies what would happen if that relationship were to deteriorate.
I'll give you another scenario. Let's say that you have a single mother and parents or grandparents want to help out, want to help her qualify, and they're not occupying the property. There's a scenario where being the single mother that's buying the house has all the rights to the home, and whoever decides to be the non-occupant co-borrower on the loan won't have any rights to the property.
Now, is that going to be part of the mortgage? Because there's 2 separate things, right? If you don't know, it's the mortgage itself where you're obligated to make those payments. And then there's also the deed. Because that's going to determine who actually owns it, who has those property rights inherent in owning, real estate. And I think what we're talking about is that can be worked out any way that's beneficial to the parties involved.
Correct.
If it is 3 friends, right? 3 ex-fraternity brothers that decide that they're going to graduate college, they all got jobs in Austin, and instead of just kind of paying rent and never building equity, they get smart, right? They decide they're going to pull their resources and buy a house. Well, one of them gets transferred, gets a different job, and has to move out of state. Part of that contract could handle that situation in any one of a number of ways. I mean, the other 2 could buy him out. I mean, as long as he made his 1/3 payment on the mortgage, I mean, it doesn't matter if he's living there or not. I mean, you could take rent out the room. I really, really think this is something that more people need to hear about. And from what I'm hearing you say from the mortgage front, it's something that happens all the time and just a matter of filling out the application, right?
Exactly.
Now, you said it is limited to 4. is that just based on your systems, correct?
That's just based on our system.
Because I know that on a deed, you could have any number of people listed on the deed, the actual ownership. But for a mortgage application, you would have to limit it to 4. Have you seen this happen, Chad?
Yeah. Just a few months ago, I had a realtor reach out to me and tell me, hey, I have this client. She's a single mom. She only gets child support, but her and her ex-husband owned a company, and she got her half of the profits.
Divorce.
Yeah, divorce. Yeah. There's definitely a legal side to it, right?
Right.
And she walked away with a good amount of money, but she wanted a nice house for her and her daughter. She made limited income from the child support,
right?
And she was planning on finding employment sooner than later, but she wanted to buy the house right now. So I said, great, give me your contact information, I'll give her a call. Well, after talking to her, she told me that her grandparents, they wanted to help her out if they can. She got qualified with her grandparents going on the loan with her, and she was able to buy a $350,000 house. Just to give you an idea, she was getting $1,800 a month. That was her only income.
So you got $1,800 a month in income. What was the approximate mortgage payment? It was more than the $1,800?
It was $2,300.
So she actually had a mortgage payment that was higher than her verifiable income.
Yep.
But was able to do it because she added additional people, to the loan. And I'm sure that having cash in the bank somehow kind of came into play, right?
Yeah.
I think maybe the message is there are multiple things that can impact one's ability to get approved for a mortgage. I'm asking you to agree or not, right? Credit and income is important.
Yes.
But they are not the only things that could determine. In other words, if you have cash in the bank, can that offset?
It can. Yeah, because they take everything into consideration.
Gotcha.
You can have the greatest credit score and not have any reserves in the bank other than the down payment. That doesn't always make you qualify.
Gotcha. But if you made $100,000 a month, you probably could qualify for a $300,000 house.
Oh, absolutely. You could probably pay cash for it after a couple months, right?
But what I'm getting to is it's the different pieces.
Yeah.
And that as a mortgage professional, you would be able to look at those different pieces and be able to structure it in a way to be able to get the approval, which is effectively what you do.
Yep, exactly.
Well, listen, I think this has been very beneficial. I've learned a lot today myself. Do you have any thoughts before we wrap this up?
I think it was great. I love the topic, and I would love for anybody to reach out to me for any questions they have mortgage-related wise.
Hopefully, we can do this again in the future.
Oh, absolutely.
If you watching have any kind of thoughts on what we might do better or ideas for maybe things that we might want to talk about, please don't hesitate to reach out. All of our contact information is in the video description. So until next time.